ESG risks should be part of your overall risk assessment. You should look at it holistically across your organization. And it should start with an inventory of environmental, social, and governance factors in the context of your organization's strategy and what you think your future strategy is going to be. You need to ask yourself, what are the risks, and are those risks material to the disclosures? Are they significant to your stakeholders? A geographic location, could you be susceptible to a fire or a flood or some kind of weather impact? Would that impact your profitability or your supply chain? It could be regulatory or a policy development. Do expected laws, will they impact ESG factors like emissions or labor laws or diversity? How about changing consumer demands? Could also be an impact. You really need an inventory of your existing commitments, and you need to compare that to what your strategy is now and what you think it's going to be in the future, and also what your public statements have been, and is your strategy consistent with your public statements today? You also don't want to forget about opportunities. Opportunities can come from your ESG strategy, and they can come in the talent area, in your products, or in your capital structure. Best practice in this area is to think ahead. When you're going to need to make an accounting entry eventually or a disclosure, think about that proactively. How does ESG factor into that on a looking forward basis? Best practice is also to consider including your sustainability officer and connecting them directly to the financial reporting group and the Treasury Department. You need to keep an open dialogue between your finance function and the rest of the functional areas of your company, as well as the sustainability function, to think about future risks and when they should be accrued and disclosed on a proactive basis, and consider foreshadowing disclosure. It's important to connect the risk assessment to your overall strategy, including ESG, particularly connecting the dots between public statements, for example, on analyst calls, and what's disclosed in your financial reporting.